Good morning. My name is Dong Tao, and I'm running non-Japan Asia economics research at Credit Suisse. Today, I will be the host having a conversation with Chairman Li from CIC. Mr. Li Xiaoping is the chairman of the Board of Supervisors. Prior to this, he served as a senior executive vice president of ICBC, China's largest bank, and its executive director. Mr. Li holds a PhD degree from Wuhan University. Without further ado, Mr. Li.
Thank you, Mr. Tao. Good morning, distinguished guests, dear friends, ladies and gentlemen. It's my pleasure to be here today to attend the Great Swiss Asian Investment Conference. First of all, on behalf of China Investment Corporation, I would like to express my sincere thanks to the organizer for the invitation. Like Mr. Tao said just now, I joined CIC in May of 2013. Before that, I had a long career at the Industrial and Commercial Bank of China, ICBC. During that time, we have established a good relationship with Credit Suisse. I'm here today as a chairman of the supervisory board of CIC, but my old and new jobs keep me on the alert, gauging market trends, managing risks, identify opportunities, and achieve good returns for our shareholder. So today I would like to share with you my observations of the global economy and the challenges ahead. After that, I would like to talk about CIC's investment philosophies and practice as an institutional investor. First part of my presentation today is about on global economy and the challenges for institutional investor. Finance people characterize the market in weather terms like market turbulence, financial tsunami, and so on, just to mention a few. This was expressed vividly about market conditions. And I would like to draw on the weather-focused vocabulary to elaborate my points. For 2014, we expect the weather to be warming up and the improvement will continue. Yet there will pockets of cloudy and unstable weather conditions. The U.S. economic weather map will be clear with the rising temperature. Early this year, its growth momentum has moderated due to severe weather conditions, decline in new orders, and slow expansion in public spending. But on the back of greater fiscal certainty, easing in tightening measures, and near completions of private sector deleveraging, U.S. economy is on course to achieve above-trend growth. Some institutions estimated that the U.S. economy would expand at 2.9% to 3.4% in 2014, which may well imply an earlier spring for U.S. economic prospects. And meanwhile, the EU economic reading would be cloudy, but the clouds are thinning out. The Eurozone embarked on the pace of recovery in 2013 and made headway in reform and adjustment undertakings, and the integration of the Eurozone. The positive momentum will continue into 2014, bolstered by the stronger external demand, easing fiscal tightening and growth in credit supply and demand. Full-year growth in 2014 is on track to reach 1%. Nevertheless, the recovery process is subject to how well the Eurozone tackles below target inflation in relatively high level of unemployment. Next, I would like to talk about the emerging economy. The emerging economy presents a mixed picture. There will be sunny patches, overcast patches, and possibly isolated showers. The emerging economies maintain growth momentum thanks to accelerated structural reforms and internal overhauls, which provides sustained driving force. Yet there will be challenges ahead, posed by outflow and capital, limited policy pace for further stimulus and pockets of political instability. But we expect these problems to be temporary, just like a shower that affects an area for a given period of the time before it clears up in due course. China's weather map would be most sunny and partly cloudy. The Chinese government has set the growth target for 2014 at 75%. Though slightly lower than that of 2013, the growth rate still lies squarely within the reasonable range of growth to ensure medium to high-speed economic growth. In the meanwhile, the Chinese government has rolled out a set of measures to pursue steady structural readjustments and reforms. These policy responses, together with undertaking to promote a new type of urbanization, will cultivate new growth drivers for Chinese economy. But as I have mentioned, there is cloudy weather in China, which means there are challenges such as local government debts, shadow banking, and overcapacity and environmental pollutions. The government is both determined to and capable of solving those issues, and we are confident of the prosperity of Chinese economy. All in all, we see sunny spots and cloudy spots on the weather map of the global economy, which presents both opportunities and challenges ahead for investors. I would like to talk about the challenges faced by institutional investors. First, public market investment. The Federal will continue to taper its assets purchase, which will drive prices of multiple assets to normal levels or below that of comparable historical levels. For global equity market, the prices have already returned to normal levels. And that means unless companies make outstanding growth in profits, they will not be growing as strongly as they did in the past 2 years. the bond market will face considerable downward pressure with interest rates trending upward. As for key commodities, the prices levels will be suppressed due to improvement on the supply side. Second, investment in long-term assets. As global liquidity level recovers, many unconventional investors are migrating their capital into long-term assets, which is an unfolding trend as we go forward. And that will lead to higher valuations and makes it more difficult to find investable projects. Meanwhile, as long-term projects in development countries are deemed as more risky, capital trends to chase assets in developed markets leave the investment shortfall growing in developing ones. Third, regulatory environment and related policies. With economic recovery taking hold, protectionism is emerging in developed countries. And some countries have tightened their regulatory procedures. There are even cases of politicizing investment reviews, double standards in regulations, which not only make more complex to navigate the investment environment, but harm investor confidence as well. In addition, underdeveloped legal system and the lack of policy support and other necessary services adds to the difficulty in making long-term investment in emerging economy. Second part of my presentation is about CIC's investment philosophy and key investment area. As you know, since CIC was established 7 years ago, our investments are underpinned by the principle of long-term investments, value investments, and invest to seek financial returns. Over time, we have developed a comprehensive and integrated assets allocation model comprising strategic asset allocation and SAA, policy portfolio, and technical asset allocation TAA. Over the past 7 years, CIC has effectively responded to a complex global economic and financial environment, pursue investment prudently within our risk tolerance, and has achieved the long-term return objective set by our board. CIC will continue to follow these tested and proven approaches and fine-tune our investment portfolio in different regions in the line with the global economic movement, striving to further our investment in developed markets while exploring potential opportunities for long-term investments in developing ones. As for CIC's key investment area, like our chairman and CEO, Mr. Ding Xuedong, has said on some occasions that agriculture, information technology, real estate, and infrastructure are the area that we are interested in. I endorse these points and would like to spend more time to continue to talk about infrastructure investment business. First, there is tremendous demand globally. Some of the facilities in Europe and the US has become out of date. They may need to upgrade these aging infrastructures. Emerging economy need to speed up infrastructure investment development to address the insufficiency while some other developing countries are facing a shortage of the infrastructure and are in dire need of new investment. China will strive to further unleash two dividends of reform and further boost the infrastructure development in the countries. It will advance China's economic reform and create more opportunity for China and other countries to work together for experience sharing or co-investment. Infrastructure investment in China is progressing unevenly. The central and west region will still underserved, and we still have a long way to go. Second, uneven infrastructure investment globally needs to be addressed. Like I mentioned just now, the liquidity is ample, but capital tends to chase brownfield projects and mature projects in developed countries. At the expense of unmet demand in developing countries, how to solve this problem? I think the answer lies with the government. The government should create an enabling environment to promote infrastructure investments and provide necessary policy support to facilitate mechanism innovation at the sectors. Long-term investors like sovereign wealth funds are after steady returns in the long run, which aligns well with the profile of infrastructure investment. The government should encourage public-private partnership, or PPP, to involve the institutional investors, domestic and overseas, to form partnership to share risk and seek win-win solution. Last but not least of my presentation is about how to improve global investment environment. As I mentioned earlier, that institutional investors are facing multiple challenges. And in essence, this is about how to build a sound financial ecosystem. A sound financial ecosystem comprises macroeconomic policies, legal system, regulatory policy, taxation regime, accounting rules, and standards and intermediaries services. Discriminatory policies and practice will drive up costs of investments and will end up creating a hostile financial ecosystem that turn away potential investors. Any sensible investor will look for friendly and transparent environment to make investments business. CIC invests on the commercial basis for financial returns. We invest as a minority investor and do not seek to control any sector or invested company, nor involve in their daily operation, still less posing any potential threat to national security. As the chairman of the supervisory board, my responsibility is to oversee the work of the supervisory board and monitor the operation behaviors of our senior executive and directors, as well as the supervisory procedures to ensure effective and good faith enforcement. The supervisory board tracks the whole cycle of investment, risk control, internal control, and accounting procedure to make sure all crucial lines are effectively implemented, and make sure our company abides by the applicable laws and regulations in receiving countries, and maintain a proper level of transparency and openness in our investment activities. CIC has built a solid track record in the past 7 years as a professional, prudent, and responsible investor. Ladies and gentlemen, since the outbreak of the global financial risks, sovereign wealth funds and other long-term financial investors have made an important contribution to maintaining stability and orderly operation of the financial markets, as well as economic recovery. However, as global economic and financial markets turn for the better today, the important role played by those funds is being downplayed or dismissed. In some cases, we even encounter tougher regulation or policies environment. This serves the interest of no one. As we all know, there is a famous saying in China: when drinking water, remember where the water comes from. As the economy gains strength, we should not overlook the sources behind it. I would like to appeal to government of receiving countries to embrace an open, inclusive attitude towards sovereign wealth funds, and create an open, transparent, stable, and predictable investment environment. On the part of institutional investors, we think we should reach out of communicate with institutional investors and make renewed greater contributions to the world economic recovery. Ladies and gentlemen, before I conclude, I would like to stress that CIC is keen to work together with you and explore potential opportunities. We are open to our all ideas, and we believe that in creating synergy by combining CIC's capital strength and the investment platform with your deep expertise in investment and management. We look forward to working together with you and making enjoyed contributions to the world's economic growth and prosperity. Thank you so much. Thank you.
Thank you. 感谢李监事长的
Thank you for the speech, Mr. Li. We have limited time, so I have one question for you, which I am sure is shared by many participants today. I have been looking at the Chinese economy for 18 years. Our customers, concerning the risk and prospect of the Chinese economy, this is the first time that I feel many people are concerned. So I would like to ask Mr. Li, how does CIC look at growth risks attached to the Chinese economy? That is a very important issue, also very sensitive. I will try to tell you what I think in the shortest time possible. The world has been watching China. Many economic institutions and economists and analysts have been commenting on China's economy. But sometimes what people propose is not really compatible with the real situation in China, and many people's efforts have failed. So when we look at Chinese economy, we have to look at its history and be comprehensive. In terms of timing, Q1 growth is not satisfactory, but it is like a pilot run. It does not represent the whole year or medium to long term. So development of Chinese economy very often comes down in Q1, and then in Q2, Q3, there will be obvious growth. That is the Chinese characteristic. We always talk about this. China has very good reserve, and the real growth very often takes place in Q2. So please don't be worried. Can we have holidays in other quarters instead of just focusing every holiday in Q1? Yes, that is up for further discussion. But we have to adopt this long-term view. Secondly, we have to consider space. What do I mean by space? The Chinese market is huge. The government is very determined in promoting reform. And by doing so, a lot of new space will be created. The government has launched a plan for a new round of urbanization. And you can see that it will focus on manufacturing, service sector, and infrastructure, so on and so forth. So there will be unlimited space created. I can give you one figure. Some experts predicted or projected that the new round of urbanization in the coming 6 years is going to turn 100 million villagers and farmers into city dwellers. So we are bringing 100 million people to our cities, and then another 100 million from the western regions will also become city dwellers. So what is the difference or impact created to economic development potential? You can imagine. So that is about the space. Thirdly, you need to pay even more attention to the content of Chinese economy. The content is now going through changes. In 2013, GDP for tertiary industry, 46.1%. For the first time, it exceeded the secondary industry, which is 45.6%. That is a huge transformation. The tertiary industry's development shows that Chinese economic growth involves a lot of restructuring. If you look at consumption, the traditional way of consuming has now moved towards internet consumption and consumption surrounding culture. In recent years, our revenue structure has gone through changes as well. According to some figures released by the media, by 2013, the gap between city dwellers and villagers is 1 to 3.01. So you can see from the figure that compared to the last year, there is a very clear decline. So in terms of content of the GDP, it is GDP that is closer to the people, and it is closer to green GDP. It is the GDP that we would like to see. So that is my analysis. I hope that you will continue to be confident. I am very confident. Thank you. Second question. concerning emerging markets, what do you think? Recently, many structural problems emerged, outflow of capital, affecting exchange rate and liquidity. You also mentioned that CIC has done a lot of preparation. So for the shorter to longer term, what do you think about emerging markets? We will leave the rest of the time to our participants to raise questions, so please be brief. Yes, emerging markets. It is like having sunny days and cloudy days. So there is a bright side and the not so bright side. For medium to longer term, we think positively about emerging markets because of the QE measures and also the drop in the prices of commodities. We express concern about the situation, but I trust because of the withdrawal of QE measures, emerging markets will not be adversely affected because we talk about cash flow at hand. As long as we have cash, we have flexibility, we have the resources. So actually, resources are backed by cash. As long as we have the resources, we have opportunity for new developments. So I believe as an emerging market, I think this year we have to tackle some challenges. For example, we need reasonable fiscal policy. We need to stabilize the market so that there will not be any major turbulence during outflow of capital. Emerging markets must reform their economic structure. They need to nurture their internal impetus to drive forward growth. Emerging economies have to perfect their investment environment, relying on their own accounting or legislative measures. This is how we can offset the impact created by QE measures. I believe that after the rainy days, there will be sunny days. We don't have much time left.
Accommodate one question on the floor. Let's see if anybody on the floor have any questions, please. Yes, please.
May I congratulate you on your English? Very, very good effort. I wish I knew Chinese as well as you know English. So well done on that. Agriculture is a real issue in China now. Feeding its people is a real issue. There's not as much land. Water is an issue. Agricultural investment requires at least 10-year patient money time frame. If you talk to a hedge fund, they'll think that you're from another planet. It's 3-6 months, they want their money back. 10 years is relatively short space of time. In terms of agriculture, is CIC really interested in investing significantly, not only in China, but overseas? For CIC, is it really committed to globally investing in land? And what, if anything, what investment returns would you expect? Thank you.
您听见了全面的问题了没有？
Did you catch the question? Did you hear? Yes? Thank you. That is indeed an important question. So I will give a brief answer. First of all, CIC, as a sovereignty investment fund, we invest globally in terms of products and regional investments. We focus on offshore investment. We don't do much investment inside China. Secondly, we feel very positively about agriculture, high-tech, property, and also infrastructure. You talked about agriculture. for CIC, we are very concerned about this sector, not just in emerging markets, but also in other advanced countries. Through our agricultural investments, we hope that we can bring stable return for our portfolio. Concerning our investment philosophy, we are a financial investor. What we seek would be return that is proportional in relation to the risk involved. Our investment will not create any threats to any country. We have made investments around the world. We have enjoyed very good return, and we are now widely recognized. If you're interested, please come talk to me after the meeting.
That concludes this session, and I'd like to thank Chairman Lee for your presentation and answers. Thank you very much.